Welcome back, everyone, to another exciting edition of the Broker to Broker podcast. My name is Mark Summers. I'm the president of AIM. Today, really excited as we were talking earlier. I'm really excited to learn to hear what he has to say. So, without further ado, I'm going to be introducing the broker owner of Go Rascal, Scott Valins. Scott, thanks for joining us today.
For sure. Hey, Mark.
So no, I know we're gonna go over your company. It's kind of switching around, and I'm sure it's okay to talk about. But let's hop right into it. Let's go in chronological order here. So tell me about your background and tell me about how you got started in the industry and basically how you became successful.
Yeah, sure. So I've been in the business for about 18 years. I got into the business in 2004. It's funny, I listen to this podcast all the time, and every single person says no one went to school wanting to become a mortgage broker or whatever. We all kind of backed in and fell into this industry in different ways, and it's hilarious. So I went to Cornell University in upstate New York. I'm originally from Florida. After a couple years working in kind of the consulting world, I packed my bags, was tired of the cold weather, and moved out to California, to Los Angeles. And if you recall, Southern California was kind of the mecca of like the subprime world back
Right.
in the early 2000s with Argent, New Century, and everything. And so I was in LA, doing working in the entertainment business, figuring my life out. I was like 22 years old, and my cousin introduced me to a couple guys that were running a mortgage brokerage. She's like, "Could be a good opportunity for you." I was kind of wandering, not sure, gave it a shot, and really the rest was history. I worked for this company for about a year, then branched off and got my own broker's license, and I've been a mortgage broker ever since, in this
Wa-
channel.
Was that retail first starting out, or was it?
No,
Have you always been in the broker channel?
always been in a broker channel. They were a broker shop, and yeah, I've always been in the broker channel. As you can imagine, I got my broker's license in like I think late 05, 06. So had maybe like a half of a good year or maybe a good year out there, and then the wheels fell off, and I ended up meeting my wife out there, who's from New York. We moved back to New York at the end of '08. Wasn't doing much in the business, but I kept my licenses active, which I was thankful for, and then really started to build up my book of business in New York while maintaining my existing California business that I built, years before. And that's what I'm doing now. I have an office in LA and offices in Brooklyn, and do about 50% of my business is New York, and still another like 30 or 40 is still California,
Oh wow.
which is
So,
great.
tell me about your current company. What's going on with it?
Yeah, so Go Rascal is brand new. It's kind of like breaking it to the world right here a bit. So Scott Capital Group's a broker shop I started with another guy named Scott in 2013. And part of kind of our scaling conversation, about a year and a half ago, I realized that I wanted to just kind of move my mortgage career in a different direction. And it didn't make sense for us to be partners, simply put. Totally like amicable, the breakup, everything's fine. I needed to bring a new partner in that really fit it, that complemented my skill set, and helped with some of my like kind of weak spots. And so the only way for me to do that was to kind of go off and create my own new thing. And so I'll officially in the next like 30 days be switching from Scott Capital Group to Go Rascal, bringing my whole team over with me, but it's a brand new entity.
Nice. Yeah, it sounds a lot like kind of what I went through. All good though, it was a good breakup. Needed to happen. Two different
Hmm.
methodologies of which how we want to take the business. He was a little bit older. I'm a little bit younger, not much younger, but I still try to consider myself young here. But no, and it's cool to hear how you do this because I love it when people kind of make that jump. You know what I mean, and kind of just go out basically on their own.
Totally, totally. Yeah, it's actually been, in some ways smooth, and not too bad, but in some ways very difficult logistically. Transitioning licenses, getting new licenses, all that stuff is frankly there's a lot of headache involved, but still worth it, and super excited about the new entity, and running with it as soon as possible.
So now, how many people are you taking with you, or like, what do you envision your shop to be? Like, how many do you carry your own processors, originators? What? Give me a little bit of background on that on your business model.
Yeah, sure. So, yeah, I'll be bringing a crew of probably about 40 people with me.
Oh wow,
Um,
that's
yeah,
big.
yeah. So the current setup now is it's mostly I've built out a much like larger business around me. My partner Scott, awesome. He does really well. Smaller. So that was other kind of like made sense to move on. So I'll be transitioning that team over with me. As you can imagine, it's mostly processors. We've got about 10 loan officers. Um, some with some seasoned experience LOs, some new guys and gals, mostly processors. And then I've made a couple really key hires through this whole process that, of course, are coming with me. They're the guys and gals that I hired to work on scaling the business. And so, knock on wood, it happens seamlessly. But one way or another, we'll get there.
Yeah, as I always say, man, we're some of the most adaptive people out there. We'll figure it out, and I'm sure, I'm absolutely sure you will figure it out as well.
Totally.
Yeah.
Yeah.
So, all right. So, a little announcement here. I'm sure some people know about it, but you've joined, and for a little bit of background of people who don't know, AIM started, a few communities or committees. I'm sorry, a few committees. Whether it's dealing with community, lender partnerships, government affairs. And we're really excited about this just for the mere fact that we're going to get a ton of members more involved. Like, we listened and we're doing it. Unfortunately, we can't get everyone involved, but you joined a committee. So tell us what committee you joined.
Yeah, so I'm on the community committee. Um, and yeah, this is a committee of, I think, 4 or 5 of us that are just out there kind of getting a sense of what the community is about and where we want and what direction we want to move the community into. There's so many little conversations we've had about ways to improve it. But ultimately, I think for now, we look at the day in, day out. We have the Brokers Are Better Facebook channel is where everyone's mostly communicating and driving their thoughts forward and helping each other out. And there's already some great initiatives to break away from that a little bit and give and present other opportunities for people to get involved with AIM, which I think is great. I love the road trips you guys took a couple weeks ago to all those cities. Can't wait for one to come to the Northeast or New York area. I'll be all over that when you guys come to town. But yeah, we want to just kind of maybe be a voice of the general overall community and bring some ideas back and help implement them and support the brand new LO who's never been a broker before, maybe never been in the industry before, who wants to grow their business, wants to go from 1 loan to 3 loans, and all the support and help there is available to AIM, and make sure they're aware of it, and at the same time avoid. Support the guy kind of like me, perhaps, who wants to go from a lot of loans to a lot more loans than that. And there's incredible resources for both of those and everyone in between. I'm really excited to be a part of the community and help drive our initiative forward.
Yeah, no, I'm really excited about it. Everything about AIM. I mean, for the most part, I'm not going to say for the most part, I love everything about AIM and what it's done and how I've been able to be a part of it. But my most favorite thing, and I've said this in every speech I've given, every presentation, is the community side of it. That part of it is in my eyes, that's where AIM hit the home run, was the community side of it.
Yeah, I mean, I couldn't agree more. The community is incredible. The support, and just the friendships and the best. I was asked a question by the community when we were speaking a couple weeks ago, and they said, like, what's the most value you got out of it? And I thought back to, like, the peak, or maybe the early parts of COVID, not so much the peak, when we were all so confused. We were all kind of locked down in our home, and as a broker, by nature, we're not used to reporting to an office of hundreds of people and all that. We're often a little bit more independent. Sure, some of us have big shops, but I think we're used to being segmented all over the country, and there was such a need for a central place for people to communicate, whether it was about the actual business and what was going on. I think all of the video updates at the beginning of COVID about just things like margins, margin calls, and the spreads, and all the things that Anthony Costa did in bringing all those people on so we could be educated. Without that, we'd all be Google searching and getting misinformation from all over the place. That was incredible. But beyond that, there was a level of emotional support, I think, for everyone. Some of the most powerful and most engaged posts we see on there are people who write about being frustrated or upset or sad or all those things we go through. Typically, actually, it's always pretty much about a mortgage related matter, but there's something behind that as well that person's going through, and the support's real and it's raw and it's great. And so I remember getting super active, really starting then. In fact, after coming back from the the Southern California AIM event. It wasn't was it Fuse, or it wasn't called Fuse, but
No,
the
that one was Activate in Irvine.
Activate, the Irvine event. I loved it, and I remember flying back cross country and being like, "Okay, I'm not going to be part of anything like that for a while." But thank God we have the community online to sustain us. So that was really the starting point for me, and now I love being engaged, and frankly for me, I'm a little bit more of a guy on the side who's doing one-on-one engagement with people. I'm not incredibly active on all the posts or putting a lot of posts up, but I've made incredible relationships by just reading something someone wrote and hitting them on the side in the messenger chat and getting answers and open book. And then next thing you know, there's a relationship, a friendship, and it's incredible. Yeah.
Yeah, so that was gonna be my next question to you is how do you some people just absolutely amaze me on Facebook and social media, how they're able to respond so fast, and and in my head sometimes I'm going, "Don't they have, like, business to write?" But then I talk to them and I see how they manage their time, and it makes sense. So how do you manage your time within Facebook like that? Anything that pops up, do you answer? Do you schedule some time? What do
So
you do?
it's Yeah, it's a great question, Mark. I'm right there with you. I'm blown away by some response speeds and just the how frequently people are on there posting, and good for them. And I'm jealous sometimes a little bit, but I actually have my assistant going in there now for notifications and things and making sure like we get back to people. I'm part of the vetted VA group, and so it's important that response times are good. And so I get, my assistant will Slack me and notify me if there's something in there that requires kind of a fast response. And beyond that, I don't know. I'm way more engaged in Facebook than I ever was before, the AIM and the BAB channel came to be. But I can't hang with some of the some of the people in there. But we do our best, and most people I think are patient and they recognize, okay, I'm not hearing back from this person because they're probably just not online as much as I am, and everyone usually gets back to you within a day or so, and it's great.
Yeah.
But
So
I've got
how do
no
you
secrets there.
I was looking for the magical secret because there's some
Sorry.
people, and I'll name him because he's been a guest here, but Tom Mancuso, man, how he does it still blows my mind, and but he's genuine about it, and that's what makes it so great. But so okay, with Facebook and this community, how do you envision this community helping? Is it strictly through Facebook? Is that kind of what you're envisioning?
No, no, we've got to branch out beyond Facebook, and we kind of know that. I mean, I remember talking about statistically, I don't know where it is now, but as of 3, 4 years ago, I remember the average loan originator was like in their 50s, right, age wise. I imagine it has come down a lot, but I also might be skewed by seeing some of the fresh young people in the Facebook group. But I still think our industry trends towards a slightly older audience, and because of that, we have to make sure we're engaged with those people outside of Facebook. And when we were on our little community meeting, I had thought of like 3 or 4 people, some my age or so, some a few older, that I wanted to reach out to and talk about coming to Fuse and just getting more active. We know we need some other outlets and opportunities. That group is amazing and it's sustainable, but I think we always want to do more and do better, and reach out to every mortgage broker and independent originator out there and get them involved and really at least educate them on what's available through this channel. And I think at the end of the day, it is education.
Right.
That's kind of the backbone, and it's amazing, and it's important that people know what's available to them.
Absolutely. It is so much education on there. And that's what I want a lot of people to understand is that everything that's going on in that community is really educational, whether it's a philosophy, whether it's how to, what's going on with the margins, how to underwrite loans, whatever the case, it's all educational.
Totally. It's all educational, and even some of the new initiatives. Someone posts something about broker startup support and Google reviews. I read the other day, and there was a response, and there's a partner, a partnership that AIM has with a company that helps you, get Google reviews better from past clients. Amazing. It's almost like, and I haven't been involved in any of this. We've thought through every scenario of like what's good and what can support and help grow businesses, and there seems to be a provider and a good business partner there for almost all of those things, which blows my mind. It's so well run, and I think we're on our way, or already we're already we're already doing incredibly well with the organization.
Good, good. Okay, so now talk to me about okay, so now we got Go Rascal here, right? So
Hmm.
talk to me about how you're going to stay in contact or what you have planned or what you have done to stay involved within your local community.
Yeah, so it's a great question. So I'm Brooklyn's our local community, Los Angeles is our local community, but I'm not born and raised in Brooklyn, so I've kind of had to build a community through college friends, their family and friends, my wife, my direct family that's local. My brother and sister live in Brooklyn, and so that community I've slowly built over the last 10 years for my personal book of business. And I've gotten to know a lot of other mortgage brokers in the area. I think New York's kind of a unique state in the sense that there's not so many mortgage brokers in New York because it's hard to get your license, it's hard to maintain your license. Loans are a little bit more difficult, they're more costly to the borrowers. So refinances, an individual that you might refinance in California, that benefit might not be there in New York because of the cost. And so I think there's a lot of companies out there that stay away from New York. It doesn't fit their business model. So in that regard, it's kind of nice, and we're kind of it could be a tight small group. I've gotten to know a lot of good local originators, especially in the mortgage broker channel. We're also, I think, maybe unlike anywhere else in the country, we are truly surrounded by retail. Like, right? I mean, headquarters, Chase, B of A, Wells, City, they are there. They're in our backyard. They're on every street corner, every bank. And so it's important that we kind of band together and do our part to take market share to the best channel, which is ours, mortgage brokers.
Yeah, I unfortunately have Quicken in my backyard, but it's fun to go against them. I mean, in my eyes, it's more like that competitiveness coming out of me. If I know someone even talk to Quicken, I'm gonna get that deal. I don't care how I'm getting that deal, but I'm gonna get that damn deal.
Totally. Yeah. It's great motivation.
Yeah, but you're right. Retail is all over the place, and sometimes we don't know it. But it's literally, I guarantee you, I probably have 10 retail offices within a mile circular of
Mhm.
me. Guarantee it.
Yeah. Yep.
Okay.
Yep.
So you got Go Rascal now. So one of the big things that I've always pushed, and I know AIM has always pushed, is actually having scalable items, right? How to scale your business. So recently you just started scaling your business. Walk me through what you did, how you did it, and what you're scaling. I mean, I want the full kit caboodle here because I think this is extremely important to our community to understand.
Yeah, sure. So, just to give you some context about pre-COVID into early COVID, when I was still just an originator with a large processing team around me and a couple LOAs supporting me. It was just my loans that I was originating. I was doing anywhere from like 25 to 40 units a month. Which was great. I built up
Yeah.
a great book of business, like I said, a really nice California chunk, and slowly but surely over the last 10 years, New York has grown and taken over the majority of my business. Naturally, it's my backyard, and so I realized that I wanted to scale. There are a few reasons that I wanted to scale. One was that I wanted to kind of really truly work on like starting and growing a true business and wearing like a CEO hat, like brand new skills for me, but I wanted to scratch that itch and move in that direction, not just be a good salesperson on the phone originating mortgages for my client, but step into another role and grow from it and experience those challenges. I don't want to say I got bored from originating because I think an originator is the most exciting role in out of all of it. Every day is a different experience, every scenario. I love it, and I think I'll always originate a bit. I never want to step away and not, be talking to a client and helping out. But I wanted to wear that different hat, and I wanted to grow, revenue and profit wise. I had the idea of just pulling, from looking out 10 years. How can I pull 10 years of profits forward into 5 years? Well, you have to grow a company and make more money. So I was thinking about that. I think the mortgage space is in a really good spot right now, but you just never know, right? We have
Mhm.
we have the government that largely dictates how our business works, and Fannie and Freddie go private or move into more of a private element. They want to bring private money to the market. We just don't necessarily know. It's been an incredible business to be in for a lot of years, and I'm not fearful that it won't be. But why not try to pull 10 years of a career into five per se? So I wanted to like move faster in that category. And the third thing was I didn't anticipate working less hard. I still work just as hard, if not more, but I wanted to have a little bit more control of my hours. I didn't want to have to, as an originator, a sole originator, vacations, whatever. I had to take my realtor calls. I had to take my borrower calls. I wanted to be able to step away from that and just control my hours. Still work a ton, but have a little bit more control, and that was important to me. My wife just gave birth to our second daughter like 8 weeks ago, and it's been already an eye-opening experience for me to have more of that time and freedom to be with my family. Um, because I have other originators under me that are working on my book of business and stuff like that. So those are kind of my three goals and initiatives. And I think the biggest thing for me is I took a step back, and those were kind of my whys, right? Why do you want
Hmm.
to do this? So I took a step back and said, okay, what am I good at? What do I stink at? And let's be very honest about it. And I think I'm very good at a lot of things, but I think I'm weak at a lot. Was or am still weak at a lot of other things. And maybe those are things that I could have learned to do, but I didn't really have time or want to take the time to do it. And so I went out. My best friend from growing up built from scratch and sold a tech company, one of those companies that you read online that started from zero and scaled their revenue up to the point and then exited by a big cash purchase from another company. And he brought he built the company with a bunch of great people that an ops guy, a sales guy, like everything that you can imagine. And when he sold the company, he actually reached out to me and said, you know, why, you thinking about scaling your mortgage business? And that was really the catalyst for it. And I was like, I kind of already think I am scaling to a degree, but not truly scaling where we have these huge goals and you miss some, and sometimes you reinvest your capital to grow even further. You push profits out in a sense. And so I thought about it long and hard, and I said I would do it if I found the right people. I'm so busy in my own world of mortgages and doing well, and I'm comfortable that I don't know when I'm going to find the time and space to do it. And he said, I'll tell you what, I've got some people who I love that help me, build and sell this business. I'm forever loyal to, and I'm mentoring them. They love the tech business. I don't know what they would think of the mortgage space, but I will put in a good word for you, and it's up to you to convince them to come join you. And lo and behold, the two guys that I needed to join me for me to say yes to scaling came on board with no mortgage experience
Oh,
about
wow.
12 to 15 months ago. One of them is an ops guy. He's great at rolling his sleeves up and exploring technologies and how they can be implemented, and lead sources, anything you can imagine. He's great at doing the research, figuring it out, setting up financial models, all those things that, I could learn, but like what wasn't going to happen. And another is a sales manager, a sales leader who knows how to recruit, hire, train, and oversee like a sales team. And they don't have to be, experienced loan officers. In fact, it's better if they're not. So you can really form them into what you want them to be. And so those two guys came on board with me, like I said, a little bit more than a year ago, and that's what I needed to then be able to put my skills in place, which frankly was everything related to the mortgage industry, because they didn't have a background, but they're really smart guys that picked it up really quickly. They have their skill sets within the mortgage space. They know enough, and now they're really executing on their very clear initiatives on what we need to do to grow, which largely has been a recruiting process for us,
Sure.
right?
Yep.
The first thing I knew I needed to do was, frankly, slow down my originations. And it was so hard, especially with the banner year we all had last year. Being willing to step away from like a sales call that's waiting in front of me of a client that wants to refinance and say, okay, this is going to go to this guy because I need to work on this. And I can't fill my 10, 11-hour day with just sales origination calls. And it took time. In fact, it wasn't until probably 3 or 4 months ago that I really made an aggressive move to wind it all down. And slowly but surely I have, and I'm still very involved in a lot of files, helping put out fires. We've got some great processing team leads that know their stuff, but a lot of my loan officers are new, and so I still need to come in and help out and help get deals to the finish line. And I love it. That part's fun and great, and I've got a lot of other things I'm working on.
That's awesome. That's awesome. Yeah. Well, first off, I didn't get a chance, but congratulations on your daughter.
Thank you. Thanks,
That's
Mark.
awesome. But one of the things you said, and I think it struck with me, is you got to know what you suck at. You know what I mean?
Totally.
You got to know, and then if someone else can do it better, by all means, let them. Pay them and get them involved in the business. But so when you were doing all this scaling, what was the biggest hurdle you think that you came across?
Yeah, it was probably a mindset. Like I
Okay.
said, I mean, we're investing for the future, and I'm fortunate enough that in this business, and a lot of startup companies that are going for scale, they have to raise capital, right? Even you see now I don't know if you read TechCrunch, but you pay attention. But every week there's a new mortgage player coming to the game. Every new no mortgage player coming to our space. It's all fintech,
Hmm.
really big capital raises, very impressive people behind the business. But they're raising capital, and they have no revenue out of the gate. They're just building systems and processes, and they can be laser focused on that. It's been incredibly difficult for me to take an existing kind of, call it mom and pop style business that I've built brick by brick over the last 20 years, and also change my mindset, my focus, saying, okay, we have some big goals that require tons of hiring and tons of capital infusion, our own, thankfully, and I have to be okay with that. And this isn't just like a slim a business that I'm running with good margins and really profitable. It will become that, and I've every reason to believe that it will. But it's scary at times to say, okay, like, I'm not just on the phone bringing in my 25, 30 loans with a processing team. And our business can be very profitable if you stay super small and slim. So it's been hard to wrap my head around that, and also manage just a large book of business. So my book, I would say, if at its I did 240 million, I think, in 2020, and I think this year my book of business, although it's not all under me, will be north of 300 million. And so
Wow.
it's a lot of business already coming in the door. You Based on the practices we do, the follow ups, all the good stuff. So we want to service those clients. We need the revenue. It's an existing mortgage business that everyone's supporting, but we're also going for some bigger goals. So it's hard to balance. And those are certainly two different hats. One's like an operator, and one is a CEO. So it's been really challenging. It has. There's sometimes I say, God, this would be so much easier if we had no business coming in the door. We
Right.
had not all the time in the world, but all the time in each day to set everything up perfectly and optimize it and test it and do the research. There's just not enough time in the day right now. And I think about often, needing another strategic hire to help me do that stuff if I need to be more on supporting the originating side with the new LOs and whatnot.
Yeah, no, and a lot of people I speak to that of the the scaling side of it or growing their business, it's always like you're right. It's their mindset. It's getting into a specific mindset of letting go too. It's okay when you have a past client call you and they want to refi. It's okay to say, listen, I'm still here. I'm still doing this, but I'm going to give you to this person because they're going to be able to take care of you better. There's nothing wrong with that.
Totally. And one place where that was kind of a non-negotiable for me is who we were going to bring in and kind of hand my book of business over to. It had to be a seamless experience for the customer, and for no one to walk away saying that was a downgrade. Scott was way better. This person's not as good. And everyone who's helped me kind of hire and train the new people, the new LOs, know that until they're up and running and ready and good, and bedside manner, communication, friendliness, transparency, all those things that I built my career on, that had to be maintained, or I would be frustrated, and frankly, it could hurt our business moving forward. So we've been successful with that, which has been rewarding and reinforcing to me, and allowing me to let go even more as I see that be okay. Right, the
Right.
fear is released uh, each day as I see it be okay in that regards.
Yeah, so definitely when you're doing this, you have to incorporate technology in this.
Hmm.
So what technology are you using right now to
Yeah.
kind of help you scale and that you run your business off of?
Yeah, sure. So the technology we're using now is largely the same technology I was using before I, brought on the key hires and started scaling. We're Flowify out of the gate, Flowify into Lending Pad. Probably going to start looking at Arrive a little bit more seriously here. We're going to get Go Rascal off the ground and not overload the staff with all these changes. And then I think Arrive would probably be in our future. But the biggest change for me is we use Jungo
Okay.
for our CRM, Salesforce base. So the two guys I hired, they were big Salesforce guys from the other company, native Salesforce, and so they knew Salesforce inside and out, knew how to build reports, build new changes, updates, whatever we need. Both of them can go in there, and there's actually a third, go in there and update it, push it out, train the team, and boom, we're off and running with this new initiative. And we actually run our whole processing and task based system through Jungo, which is great. Pushes out automations at this and reminds people to do this and that. That is something I was never good at. I could not. I kind of went from CRM to CRM, and they always say the best CRM is the one you're going to use. I
Yep.
really never used one. I had another technology support guy who had me on MLO Shift for a while and actually liked it. It was very user friendly, but the reporting was not good for us. And so when these guys came in, they said, okay, we've got to pivot from MLO Shift, and we're Salesforce guys, so let's start with Jungo. I think
Hmm.
eventually we'll go to Salesforce ourselves. But Jungo's been very, very helpful and strong enough for us now. And so Jungo, Lending Pad, um, and Flowify are our kind of our tech stack. We use Ring Central for our phone. I think we're going to move over to something a little bit more robust soon, that integrates with Jungo a little bit better. But
Hmm.
no, it's largely been the same. I mean, my thought is, so you hear scale and you hear technology and you hear, capital raise and so if we were to turn around and go raise capital, we probably would have to put some unique tech bend on our business and not just say, oh, we've nailed down these third party companies and like we use them so well that our technology is humming. We'd have to have something kind of proprietary, to impress investors, but fortunately we don't need to do that. And so this is working for us now. I think the third party market is great, especially thanks to AIM and BAB. They see like this very unified community, and it's motivating third party technology to go out there and continue to build things really good. And they've got a marketplace, us, that if it's great, we're all going to buy it. It's phenomenal. So I think it's just another, nod to AIM for kind of something people don't necessarily think about, but the technology stack and the technology world is benefiting us from us all being in this part of this group.
Well, thank you. And we have a team back there that does that, and they do an amazing job. I mean, over at the AIM office, we get contacted all the time about people wanting to join our vendor network. The brokers are better network, and we have to sift through every single one of them, and hopefully giving it to the back to the broker where it's broker friendly. And I think they're doing a great job of it right now. So, all
Totally.
right, Scott, you have the floor. So let's just say you're at Fuse, you're at an event, and you get to stand up on the stage and you get to give one piece of advice to the community, whether they're new, old, going from retail back to the broker world, whatever the case may be. What piece of advice would you like to give to the community?
Network with other mortgage brokers. Find your method of doing it. Just kind of goes back to my story earlier. If you're not someone who feels like you're, up for big posts on the message board, that's just not your thing. Find someone offline. If you're at AIM in person, find someone in your local area from home that's going to be there, and go grab a drink or sit down with them and get to know them. There's just so much networking opportunity, even whether it's from people across the country or from people in your local market. At least you can talk about some of the challenges and unique things about your local state and market and band together. I think networking is everything in this group, and not so much. Yes, getting referrals from each other is phenomenal, don't get me wrong, but it's what we can learn from each other, and just having a sense of community and togetherness. um, I think what we're still in the low double digits. What are we, 19-20% market share right
Yep.
now in the country, 18, something like that. I think we're not
We're
even
hovering
back to
around
the best.
20. Yeah.
20 or hovering around 20,
Yeah.
incredible. I think we were probably single digits when we hit our worst in 10, 12 years ago, but we've got so much more room to go. And I think if you're a mortgage broker, you're all in as a mortgage broker. And I use that phrase. I know, like, it's a UWM phrase, being all in with UWM, and that's not necessarily what I mean here. But like, there's a sense of supporting a bit of the underdog right now. That's still, we know we're not the underdog. We know we're the top dog, but the rest of the world still sees us as the underdog. And so I think networking is, it's a general term, but like, find your comfort level. If you say I don't like networking, all that means is you haven't figured out your way to network. And AIM and with the events and online, there's, all it takes is meeting one other person in the community for them to support you, mentor you, have a one-to-one once a month, check in, whatever it is. Then you're networking, and you never know, once you scratch that itch and start to work that muscle, you might be like, I love this. And now I'm going to become active here and do this. And next thing you know, you've got a nice large community to support you that you can support. And there's more to just originating loans. It's about being proud of what we do, and enjoying it with each other.
That was awesome, Scott. That's perfect. And that's why I promote Fuse so much. And yes, I'm going to put a plug here because I'm allowed to. which is go to Fuse just for the mere fact of I tell everyone just the collaboration and getting to meet people. The community side of it is where it really lies. Yeah, we're gonna have great speakers, and we've already announced them, and we're finalizing our agenda, which is going to be great. Don't get me wrong, and you're gonna get stuff from it. But man, just to be able to collaborate with other like people and network is where it's at.
Totally. I'm bringing, I think, 5, 6 people from my team. 2 years ago, I went to Fuse with just one other person. And now I'm bringing 5, 6 people from my team. I'm so excited. Some people that are relatively new to the mortgage business too, and their minds are going to be blown, and they're going to be all over meeting people, and it's going to be so much fun. I can't wait.
It's gonna be awesome. Well, Scott, I gotta say, man, thanks for sharing your insights today. It was awesome. I mean, I personally think you knocked it out of the park. I know this is gonna be a great episode for people to listen to. So I just want to thank you for taking time out of your busy day. I mean, if you're doing, 35, 40 deals a month, man, you're a busy man. So, but I just want to thank you
Yeah,
for your time.
for sure, Mark. Great talking to you.
All right. So, brokers, if you want to get caught up on all of our past podcast episodes, please head over to aimgroup.com/broker to broker. You can also listen to all the broker to broker podcast episodes on iTunes, Spotify, Google Podcasts, and anywhere else where you can download podcasts. And do me a favor, subscribe to it, rate it, and please leave a review. It helps us get the word out there that brokers are better. So Scott, once again, thanks for joining us today, and keep crushing for the rest of the year, and good luck on Go Rascal.
Thanks, Mark. You too.
All right.